Hello, welcome back. Today we are going to discuss the IAS 10 event after reporting period, and in our discussion we discuss what is IAS 10 about, what is the event after reporting period, types of event after reporting period. Also we discuss the treatment of those event after reporting period and other provision of IAS 10 events after reporting period. To start our discussion, we will define what is event after reporting period. According to IAS 10, event after reporting period are events, both favorable and unfavorable, which occur after reporting period but before the financial statement are authorized for issue. When we say reporting period, after reporting period, we mean that the event which occur after the end of a financial year. So if your financial year ends 31st December, then that is end of reporting period. Then all events which occur between the end of reporting period and the date when the financial statement are issued to the public is what are referred to as event after reporting period. Why is there event after reporting period? Event after reporting period occur because it is not possible to issue the financial statement on the date when you are closing your accounts, because it takes time to prepare statement of financial position. Also, it takes time to approve the financial statement. So there is a time between end of the period and the period when the financial statement are authorized for issue. Okay, so what are types of event after reporting period? Event after reporting period can be divided into two types. Type 1, event which are called adjusting events, and another type 2 are called non-adjusting events. So there are two types of event after reporting period: adjusting event and non-adjusting events. Adjusting events are events which occurred before end of the period, end of reporting period, but the evidence of their occurrence have been obtained after reporting period. So the adjusting event are evidence which gives us the evidence of event which occurred at the reporting period. So adjusting event, in other words, means event which were there when we are closing our books, but we are not sure. Example for adjusting event include, for example, the customer, you have a customer and the customer went bankrupt after reporting period, after end of reporting period. So this means that the account receivable which you recorded in financial statement are now impaired. So the bankruptcy of customer gives you the evidence that the account receivable were not supposed to be put at the figure which are now in the financial statement. So they must be adjusted. That's why it is referred to as adjusting event. Another example of adjusting event is identification or knowledge of price of inventory after reporting period, which indicated that inventory price of inventory or in other words net realizable value of inventory is less than cost. It is difficult to know if the net realizable value of inventory is less than cost when you are closing the books. In many cases, the evidence of net realizable value is obtained after reporting period. So that is some example of adjusting event. Non-adjusting event, in the other hand, are events which occurred after the reporting period. So they are indicative of situation which occurred after reporting period. So that is non-adjusting event. What are the treatment of event of reporting period, both the adjusting and non-adjusting events? For adjusting events, when the adjusting event are identified after reporting period, the treatment is that you should adjust the figures in financial statement to reflect those events. So if the customer went bankrupt after reporting period, you will have to adjust the account receivable figure in financial statement in order to reflect that event. So for adjusting event, you will have to adjust the figures in financial statements to reflect the event which have occurred after reporting period. For non-adjusting events, the IAS 10 prescribe that for non-adjusting event, if material should be disclosed in notes of financial statement. So for non-adjusting event, just disclose in financial statement if material. And the disclosure will include nature of the non-adjusting events and the financial implication of non-adjusting events. And if you cannot establish the financial implication of the non-adjusting event, you should also say so. Another thing to note here, okay, I did give the examples of non-adjusting event. Examples of non-adjusting event include, for example, fire accident after reporting period. If there is a fire accident after reporting period, that is one example of non-adjusting event. Another example which is given in IAS 10 regarding non-adjusting event is okay, for example, you have acquired a subsidiary after reporting period. That is an example of non-adjusting event. Or you have ceased the operation, major of your operation after reporting period. That is an example of non-adjusting event. Okay, so that is types of events of reporting period and their treatment. Another issue which is given in IAS 10 is how you should deal with the dividends which have been declared after reporting period. Okay, we know that many companies are declaring dividend after reporting period. Okay, if a company declare dividend after reporting period, that is equal to non-adjusting event. What does that mean? That means that when you declare dividend after reporting period, you will have to just disclose in financial statement, because the dividend declared were not present obligation when at the end of reporting period. So you will just have to disclose it in the financial statement. But for those companies which declare both interim dividend and the final dividend, for interim dividend you will have to disclose we will have to include the figure in financial statement. But for final dividend which are declared after the reporting period, you will have just to disclose it in financial statement. Another issue which is is discussed in IAS 10 is the issue of going concern. IAS 10 says that if the entity or company becomes losing the going concern status after reporting period, the company should adjust its financial statement to reflect that situation. So, for example, company after reporting period finds itself that it can no longer be able to operate within next 12 months, then it should adjust its financial statement to reflect that status. That means it should make or should prepare its financial statement in a breakup basis. breakup basis. Breakup basis means preparing financial statement by adjusting asset to current asset, non-current asset to current asset, and make adjustment which will mean that the financial, which will mean that the business will no longer be there in 12 months. So that is IAS 10 in brief, and for in-depth analysis of IAS 10, don't forget to subscribe in this channel. We will discuss it. We will solve questions on this channel regarding IAS 10. To subscribe, don't forget to comment, and if you have other inquiries, please send it to my email. In other videos I have given my email, but or just comment on just give your comment below, and we will deal with it. Until next time, thank you for watching. Have a good time. Thank you.